Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and these are the top stories. Midcaps outperform large pairs even as the Nifty and the Sensex hit session highs in afternoon trade ahead of key inflation data. Pharma autos eke out gains while FMCG drags.
Vineyard surges on delivering its strongest quarterly sales. Wine tourism sees 18% growth and is expected to be a 100 crore business in FY24.
Time Technoplast gains on a 54 crore order win from IGL to supply CNG cascades.
A mega order for the supply of Vande Bharat trains, Boys, BHEL and Titagarh wagons. Titagarh wagons management tells CNBC-TV18 their maintenance revenue will be more than double the supply price.
Puravankara jumps on a strong Q4 update. The management tells CNBC-TV18 they aim to launch projects spanning 14 million square feet this financial year.
Okay, those are the headlines on Midcap Radar, all the midcaps that are in focus. By the way, the markets, they're surging in house. So we have Nifty, which is sitting at the day's high, 80 points higher on that one right now at 17,804 mark. We also have the Midcap Index, which is in line with the benchmark. At a point in time, midcaps were outperforming the benchmark, but now they're at par. So 0.4% higher or 0.5% higher on the Midcap Index as well. And it is led by the Bank Nifty surge, the Nifty surge that we're seeing. So Bank Nifty is up 175 points. And of course, we have a lot of sector-specific moves. Pharma is the biggest gainer in the broader markets. We have fertilizer stocks which are doing well. Look at that Nifty Bank, the way it has spiked in the last couple of minutes as well. So Reema, of course, looking good for our own markets right now. We have TCS. You'll tell us how the numbers are post-market hours. And the CPI data, that is the big cue to watch out for as well.
17,800, right? This market just continues to climb higher and higher. And everyone thought that today perhaps would be a quiet session because there are so many events lined up. But markets are going into these big events, inflation data, earnings, the FOMC minutes, very strong. And look at Britannia. Banks, of course, are leading the rally and have seen a big up move. But the intraday chart of Britannia will show you that some of the other stocks too are seeing a big spike in the last few minutes. But let's talk about the midcaps. They're moving in step. The advanced decline ratio has nearly 2,000 stocks in the green. This is Midcap Movers. Vivek is here at the big wall.
Well, thank you so much for that. It's another session. Continuous up move as far as the mid-cap and the small-cap space is concerned. Select stocks, in fact, have moved up almost 25-30% in the month of April itself. First on our list is fact, the fertilizer company. This particular stock is up 35% in April itself. Some of the other names that are doing well on good volumes as well. Technocraft up 12%. GM Breweries after the results, has surged almost 6% in the trading session today. Metropolis Health as well as Indostar, some of the other names that are doing quite well. Now moving on to some of the stocks that are moving on very strong volumes in the session today, almost 5 to 7 times the typical 5-day or 10-day average. Route Mobile, after a while, up almost 4% in the session. Sun Pharma Advanced, you are seeing a rally as far as the mid-cap pharma names are concerned as well. National Fertilizers as well as Madras Fertilizers today up on strong volumes. Lastly, some of the names, not too many stocks that are seeing profit booking or, correction, but CAMS today down almost 2%. Eureka Forbes on the back of likely stake sale coming in, as well as, Atul Auto. These are the names that are seeing a bit of correction in this session today.
More gainers and losers, right? That's the kind of market we are in today. Vivek, thank you so much. Just a word on fertilizer names because they're up anywhere between 9 to 20% on facts. So to say lower gas prices and indication of a normal monsoon, definitely positive for these names. So these are buzzing around in trade with big gains in trade. We'll move on and welcome Jay Thakkar of Sharekhan for a technical check on the markets. Jay, what are you making? The kind of moves that we've been seeing, 8 consecutive day of gains. Do you think we'll build on to those gains, or this is the level where we'll see some consolidation?
Hi, very good afternoon to you. Last time when I had discussed the view, I was very clear that we will see the levels of 17,800, 850, and those levels have been met today. And going forward from here on, obviously, we have seen this this is a 7th consecutive positive day for the Nifty. And, it has reached now to its previous swing resistances on the weekly charts of 17,800, 850. So it can find some, resistance out here, or maybe, it can see some consolidation from here or a profit booking. But then above 17,800, the next level that comes directly is 18,000, 18,100. So going forward, we will definitely see those levels coming in. The overall up move which we have seen has been on account of the short covering also, which we have seen from the FIs. I mean, the net shorts have come down drastically. in the past couple of trading sessions. The PCR is well above one level, both on Nifty and Bank Nifty is trading quite comfortable ahead of the weekly expiry. So I think that at least for till tomorrow, I mean, overall data is quite positive. I don't see much of downside from here on unless we see some overnight reversals out there in the US markets. As our markets are concerned, I mean, since it's providing a breakout above 17,800 on the Nifty, it's heading towards 18,000. And since Bank Nifty is providing a breakout above 41,500, it's heading towards 42,000. So these are two short-term targets of mine, 18,000 on Nifty and 42,000 on Bank Nifty, keeping in mind the kind of data or the activity on the derivatives front and technically the kind of breakouts that we are seeing. This can continue for a day or two more.
What about stocks?
As far as stock-specific ideas are concerned, I mean, we have seen a good momentum coming back into the pharma stocks, and maybe large cap or mid cap, these pharma stocks are doing really good. And I see a very good reversal coming in Laurus Labs. So one can buy Laurus Labs at current levels. Today, after a long time, we have seen this kind of an up move. It's up by 8%, trading at around 327. My targets are 360 to 380. One can buy Laurus targeting 360, 380 in the short term, whereas one can place a stop loss at 310. So risk reward is absolutely in favor of the bulls out here. And the second buy recommendation of mine would be on Spark. I mean, both of the recommendations should have got from the Pharma index because we have seen a really good breakout coming out here. As far as Spark is concerned, it has seen a good breakout from consolidation. One can place a stop loss at 187 and target 210 to 250.
It's all about pharma today, right? Thank you, Jay, for joining us and taking us through your technical bets and outlook on the markets as well. With that, we'll slip into a short break. On the other side, Sahil Vachani, who's the MD and CEO of Max Ventures and Industries, will join in next to discuss their business momentum and impact due to the RBI policy decisions recently. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, realty players, they've seen a steady rally of late. That is also in the light of RBI's surprise pause on rate hikes. Now, will this spur more demand? Also, what does the sales scenario for commercial realty look like? And a lot more. We, of course, have Mr. Sahil Vachani, who's the MD and CEO of Max Ventures and Industries, joining us now. Sahil, good afternoon. Thank you so much for joining us. I know earlier your focus mostly was on commercial real estate. Now you've ventured into residential real estate as well. Tell us, what is the split looking like between these two segments? With the expansion plans that you have in place, what would that split be like? Will there be more focus on commercial, or will you have an equal focus on residential real estate as well?
Thank you for having me here. Good afternoon. So Max Estates, which is the real estate business that we operate, was only in commercial real estate, as you correctly mentioned. But over the last financial year, we have closed 4 opportunities, and we have split equally between commercial real estate and residential real estate. So we have one new office project in Noida, which is 1 million square feet, and another 1.5 million square feet of office that we are coming up with in Gurgaon. In addition to that, we have signed 2 residential opportunities, one in Noida, which is for 1 million square feet, and in Gurgaon for 2.5 million square feet. So in total, if you look at it, we have added to our portfolio about 6.5, 7 million square feet over the last year. And this is split between geography, equally between Noida and Gurgaon, and also split equally between office and residential.
Do you plan to add more in FY24? Any targets for commercial and residential real estate for FY24?
We will look to evaluate more residential opportunities in FY24. Currently, we are focused on launching our flagship project in the coming few months in Noida for residential, and by the end of this year for Gurgaon as well. So we always are on the lookout for opportunities, and hopefully we'll close something towards the end of FY24 in residential.
Okay, so I'll ask you more on that, but I wanted your word on commercial because you've seen a lot of cycles here as well, right? While we were talking about the impact of interest rate hikes on residential, we did not discuss much of an impact on commercial because that is something that globally at least impacted in terms of the banking fallout, what happened with commercial real estate. One, how is demand right now? And second, with so many new stores or bigger brands like Apple, for instance, coming to Delhi, do you think it'll have a better impact on rentals and it'll lead to higher rentals, so to say?
Yes, in commercial real estate, actually, interestingly, we are seeing an interesting phenomena, which actually is also prevalent in other parts of the world. It's a little bit of a K-shaped recovery model post-COVID, where good quality office buildings, which are very strong on amenities, which are very strong on infrastructure and heavy on customer experience, are seeing good demand, are seeing good traction. And we ourselves in Max Estates have seen very strong demand, even through COVID, when everybody was working from home. We have seen our flagship development, Max Towers, and our second development, Max House, both getting leased 100% at a price premium of almost 25 to 30% premium to the micro market. So we are seeing good quality demand. We are seeing high demand for good quality developments. However, we are also seeing that some developments that are a little bit older, not great quality, and not so much focus on end customer experience are seeing increased vacancy rates. The second element here is about what's happening in the US and particularly in the tech space of slowdown. And traditionally, what one has seen is that in such a time with a lag of a quarter or two, the demand actually in India moves up for the technology companies, particularly those who, and though they occupy about 35% of the overall office space demand in India. So we are hopeful and confident that, with the cost advantage that continues to remain in India, and most of developments being able to be offered at sub-dollar square feet per month, that the demand from the tech players will also come back. And the third element here is the work from home, as you correctly pointed out. And increasingly, we are seeing that there is more of an acceptance of a hybrid model, where managers and employers are keen to get their people back into the office from an aspect of culture, from an aspect of managing them better. And therefore, we are seeing that there will be some move back into the office, although through a hybrid approach.
I just want to get some numbers, Sahil. What could be the expected rental income next year, or the growth in your rental income?
So we have closed the last financial, we closed the last year with an estimated rental of about 100 crores. And we are looking to add another 700,000 square feet of development which is our flagship, our third project, Max Square, that's coming up in Noida. And then in a few years from now, the 2.5 million square feet of office space that we spoke to you about will be added. So in total, we are going to be looking at an overall footprint of close to 5.5 million square feet of office space that's going to be rent yielding for us.
Okay. Can you give us a sense of when the merger will come through between Max Ventures and Max Estates? You said in December it'll take around 4 or 5 months. Where is it standing? And also, will you look at merging Max Asset Services as well?
So Max Ventures is our listed company today. It has only one business, which is the real estate business. This is after we exited our packaging business last year. And we're hopeful that by the end of the first quarter, somewhere in the range of June or July, the Honorable NCLT in Chandigarh will approve the amalgamation scheme before that, and Max Estates can be directly listed on the stock exchange, although it is quasi-listed through Max Ventures today, but directly listed on the stock exchange. So we're very hopeful and confident of that. In particular, Max Asset Services, it will be a subsidiary of Max Estates because its primary objective is to provide facilities management services and ensure and enable customer experience across all our developments. So it's a subsidiary of of Max Estates.
Okay. Last question before we let you go, Sahil. I was looking at your presentation. You said, of course, New York Life has a substantial chunk in the company as well. It also said that it will continue to evaluate further investments as strategic investors in the commercial real estate business. Anything which is in the pipeline with the ones that you just spoke about, the expansion plans that you have, will they be funding it, or will you look at getting some more debt?
No, we are not looking to get more debt. We are looking at equity, and in fact, we have already announced in the past month or so, New York Life's co-investment with us in our Noida office project and also in our Gurgaon office project. So this is their fourth consecutive investment with the Max Estates and within our real estate business over the last 5 years. So they've come in Max Square Phase 1, Max Square Phase 2, Gurgaon project, and also they own 23% in the listed company. So we're very pleased and delighted that they are our partners and continue to support us and validate our execution capabilities in the commercial office space segment.
Sahil, we'll leave it at that. Thank you very much for joining in. That's Max Ventures for you. Get into a break. On the other side, it will be our special segment, Midcap Spotlight, and we'll focus on Venus Pipes. Stay tuned. Welcome back. This is our segment, Midcap Spotlight, and the stock which is on the spotlight today is Venus Pipes. It's a fresh 52-week high on that. So now we know the news is famed investor Ashish Kacholia has bought some shares in Venus Pipes.
Oh yes, that's the main reason why we are looking at the stock, and the stock is higher as well in trade, right? It's hit a 52-week high today, and in this month itself, it's up 12%. Now remember, it's a fairly new stock, new to the bosses. So it listed back in May 2022 and listed at a 8% premium at 350 rupees per share. So from that level, it has seen a substantial up move, right, in terms of stock price as well. Right now, it's at 838 rupees, so more than doubled in last couple of months itself. So the news is that Ashish Kacholia, who's a very well-known investor, has bought 4 lakh shares or 2% equity of the company at 750 rupees per share. Nuvama Wealth Finance Limited has sold 1.38 lakh shares. Now, I was just looking at some numbers as to why the stock price has done so well and why an investor would have invested so much money in this particular counter, right? So the company is basically a manufacturer of stainless steel pipes and tubes, and taking a look at their financials as well, good growth is what the company has seen. In FY20, the revenues were 178 crore rupees. It has more than doubled in FY22 to come at around 400 crore rupees. Margins from levels of 7% in FY20, they have inched up to levels of 13%. So there has been a continuous improvement in margins as well for the company. So FY20 7% margins, FY21 11% margins, and FY22 13% margins. So good going there as well. Similar is the story. In fact, profits have seen substantial jump from 4 crores in FY20. Now it's 32 crores in FY22. So 8 times is the increase that we have seen in profits as well. We have not been able to have continuous conversations with the company in terms of their outlook, but the last time we did speak to them, they said that revenue growth over FY24, FY25 should be at around 40% CAGR. FY24 EBITDA margins will see an increase of around 400 basis points. Current market share for them in the industry is 5%. They plan to raise it to 12 to 15% post the expansion plans that they have in place. Going forward, promoters may increase their stake in the company, and export contribution, which was the last known number was around 10%, will increase to 20%, so more than double, so to say, as far as exports are concerned. So fundamentally looking okay. They have expansion plans in place as well, and that could be the reason why a known investor has bought the stocks of the company, and yes, the stock is at a 52-week high.
You know, it's also the FII holding in Venus Pipes has gone up. In September of 2022, its holding was less than 1%, 0.67%, and as of December last year, it went up to 5.8%. So it's not just, you know, the Indian investors who are lapping up Venus Pipes, it's even the foreign investors. So from 0.67, it's gone up to 5.8% in the December quarter. We're still awaiting once the company updates the March shareholding. But that's Venus Pipes for you. Let's move on. The government's new national curriculum for school education is expected to boost the revenues of book publishers over the next 3 years. Earlier today, we had a chat with Ganesh Gala, Managing Director at Navneet Education, to get a sense of how the latest curriculum as well as the national education policy at large will impact and aid their business.
As far as stationery business is concerned, the margins would be around 11-12% going forward. As far as blended margins for the company is concerned, because stationery business is going a little faster than the publishing business, so blended margins should be between 20 to 21%. FY24 blended revenue should be in upwards of 1900 crore. 25, we may add up another 15%.
Okay, Navneet, education is higher by 5% in trade today. So a lot of mid-cap movers, right, that we are seeing doing well in trade. For now, the market's up 80 points. So steady as it goes. So the Nifty 17,800 is the level to watch out for. We have the mid-cap side of things doing really well. So 150 points higher there. A couple of these fertilizer names should be on your radar because 20% higher. In fact, it has seen a one-way move there. Madras Fertilizer also is up 20%. So yes, these stocks are doing well. Laurus Labs too is higher by 8%. So Pharma continues to be the theme. Of course, we'll keep discussing this and analyzing markets for you. For now, we'll take your leave at this edition of Midcap Radar. Thank you so much for joining us. Your stocks when we return.